Hello and welcome to Options Guy TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next half hour here on Options Guy TV. I am traveling, so you will have to look at my picture today instead of my ugly mug over the camera. So on Monday, we got a little crazy. We looked at Coinbase, which was reacting to what was going on more importantly or most importantly in the crypto space, and in particular with Bitcoin. Bitcoin was rocking and rolling, setting recent highs, and the marketplace was reacting. Anything that was involved with the crypto space had a big run up on Monday. In my mind, Coinbase was a little bit too high of a run up. As I mentioned, I do have Coinbase in a long term portfolio. So I actually dollar cost averaged in Coinbase, bought a little higher and went down and bought a little more. So I do have that position in an retirement account. But today, on Monday's show, we just looked at a short-term speculative trade in Coinbase. And what we really used was the options playbook to discern the difference between looking at a short call spread versus a skip strike butterfly. And we build it that way, and that we're talking about an alternative to a short call spread is a skip strike butterfly, as opposed to an alternative to a butterfly is a skip strike butterfly. And I say that because the way you approach option trading in many facets is all about where you start. And by starting with the short call spread, you're looking at, I think it's easier to understand a skip strike butterfly, and that we're literally selling the short call spread to pay for the standard butterfly. And when you combine it all together, all that really happens is you skip a strike in the standard butterfly, and you can get that butterfly done for a net credit to the account. Now, a lot of times on the skip strike butterflies, we like to do them in the S&P 500 index, the good old SPX, and we've done a ton of them on Options Guy TV going all the way back to November. It was kind of our plan to ride the S&P 500 index all the way up to the 5,000 level, and we did that. And we did that with with actually very good success. To be blunt, you always have bad ones every once in a while, but that strategy worked out all the way up to the 5,000 level in the S&P 500 index. Now the market becomes a little bit more convoluted, and we can't just keep talking about skip strike butterflies in the S&P 500 index. That's a staple of my portfolio, and doing something in the S&P 500 index is my favorite index to trade. Not always going to be just trading that, but that's more of a staple portfolio. A lot of the trades we look at on Options Guy TV are speculative in nature, and that's what Coinbase is. So when we approach Coinbase after the very large run up, and I'm going to show you a chart in just a second on Coinbase, but once we show you that and that big run up, we will you will see that it might have been a little overbought, and that's exactly what we were going for. It's not saying that we didn't think Coinbase a year from now could be higher, but in the short term, it just was a little bit overblown, and it was really based off of the hype on the fact that Bitcoin was skyrocketing. So nothing to do with the fundamentals. So eventually you expect a little bit of a pullback, and we got some of that pullback. But man, Coinbase is really strong today. We're seeing it back up again, but the trade is working out. So here's the concept. And I also want to introduce to you, here is the new Options Playbook website. We're going to be doing a lot with the graphics, but, and I guess I'll actually hit this little drop down here and pull up option strategies in a new tab. So Tradier is the main sponsor of optionsplaybook.com at this point in time. And so we do have, thankfully for them, we do have some advertising. But this is the most popular page because this summarizes all the strategies inside the options playbook. And you got a collapse all, expand all. If you hit expand all, it shows you all the strategies for the rookies, go down to the veteran trades. And then if we continue on down, we see the seasoned veterans. And lastly, we have the all-stars, but actually it's going to be way down at the end. And these are the all-star trades. So right now the trades, skip strike butterfly and short call spread, we have highlighted inside the seasoned veterans section of the strategies page inside the options playbook. So as I mentioned, we focused on the short spread and we sold this short spread, which brings in a net credit to the account. So we're bringing in a net credit. In our instance, the markets were all over the place on Monday, and it made it very hard to do the show, to be blunt, because Coinbase was moving so fast, almost like it's doing right now. Coinbase right now is up 4% on the day, trading at 266.13. And it's been all over the place today since the market opened, ever since 9 a.m. At 9 a.m., it actually, it opened very close to, 10 points lower. $250 and some odd cents is where it opened. Market has bounced up in the next hour or so, ran up to 256, and now we're seeing it as high. Actually, the high on the day is 268, so it's came off its high just a little bit. All right, so I was able to just stop the quotes, and after the show, I looked at, okay, if we freeze the quotes at a moment in time, what was the short spread trading for at that second? What was the skip strike butterfly on the midpoint trading for? And what was the standard butterfly? And the math all worked out. It was all fairly close in that if you sold the short spread, we got it done for a net credit of $1.02. If we did the skip strike butterfly at that second, when I took that screenshot, you would have gotten that trade done for a 42-cent net credit to the account, which means that the standard butterfly, which you're using the credit from the short spread to pay for that, was 60 cents. So 102 was the net credit on the short spread. If you would have did the skip strike butterfly, the net credit was 42 cents, which means if you do the math and it all worked out, if you did the standard butterfly, you sold the short spread to pay for the standard butterfly, that butterfly was trading for 60 cents. And if I want to, I guess, why not, right? We're in here. Why don't we put in the good old standard call butterfly, long butterfly spread with calls? So these are really the three trades that you're working with. We sold that to pay for this to end up with that. So that's how it all worked out. All right. So on Monday's show, I was having issues with the quotes. Of course, as soon as the show was done, I had no problem getting into the TradeHawk software. But for a moment in time, I couldn't get any quotes. So we decided to just use the playbook. Playbook looks totally different. If you look at Monday's show and you look at it now, it just launched this morning at 5 a.m. And we're going to be doing a lot of animation on the actual graphics. So it's going to even get better over the next few days. Much more mobile friendly. And we're just going to keep working on it, adding a lot of videos and a lot of content to go along with it. All right. Let's pause for a second. And I can't really jump out here because I'm doing this mobily. So you're going to have to look at my tabs, and we're going to jump over to the TradeHawk software. Now we are in Coinbase, and the show is going to be short and sweet today. Mainly because I am traveling, and so I'm not going to have a paper trade for you, but I do want to show what happened in Coinbase because the trade's working out, and it's been very interesting since Monday. Okay, so let's go to Coinbase. This is the actual graph on Coinbase, and I'm going to zoom in a little bit here. So you see how wild the stock has been. I personally, let's go back 1,500 days. All right. Now, Coinbase is a recent IPO. So it IPO'd all the way up here around 420. I bought some in this range. the very first time around. And obviously that worked out for a minute and then it didn't. So I'm being blunt in that I really did buy 100 shares of stock or so in this range. Let's just call it 100 shares. We'll say 100 shares. And then I went back and doubled up right in this range, right down here, because it stayed flat forever and it really wasn't breaking out to the downside. So you had some capitulation. It was probably right here when we saw the golden cross and the market started to break back up. And so I've had 2 chunks of Coinbase that I've bought in my account. I'm about back to break even right now from the 2 chunks that I bought. And in our trade, we see let's just grab this from right here. And we'll grab that range and we'll pull in. And you just see the straight up nature, almost parabolic in the way that Coinbase has been recently. Now, they had good earnings. Robinhood, some of the others that are associated in the crypto space on their earnings report had solid numbers too. So in the crypto space, it's really just done well this quarter. In the last 3 months or so, it's done very well, and Coinbase has resulted in that. Now, I like Coinbase a little bit better than Bitcoin or a specific crypto. Better is, I guess, a relative term, but I find it's more interesting in that there's a lot more other products, but it does thrive when the crypto space does well. So when the crypto space does well, it does thrive. And because of that, we'll see that Coinbase in general is just an interesting stock, that it's got a solid management team. They're trying to work with the regulators to make the space feel safer. They are definitely embracing the regulators in this space. And so, right, if you like Bitcoin, Coinbase is an interesting alternative. We'll leave it there. Okay. Stock made to run up. If we grab this area, this was a golden cross right here where the 20-day crossed over to the 50-day moving average. And from that point, it's been real strong. We did have the pullback. So in the last few days, since we put the trade on, the market, let me grab right here. So this was Monday, right? Yep. So that's Monday. This is Tuesday. So we did get a sell off after our trade, which helped. And now this is Wednesday, and the market has came way back. So you had a sell off. And if you were in the short spread, you probably would have just closed it. You might not have done it in the skip strike butterfly because, as I said, you've already embedded your hedge in the trade. But there was an opportunity on the tail of that candle to maybe close out. If you were just in the short spread, I may have closed it out if I could have closed it for around 20 cents. We sold it for $1, remember. So if we go back and we look at that short spread that I was talking about, and let's send this to the what if calculator just to have it there, and then we'll come back to the trading tab. If we look at this trade right now, you could buy it back. Well, it looks like for 48 cents. So this is the trade that we did. We sold the 3-4. Well, that we thought about doing. The official paper trade was the skip strike, but we sold the 340, bought the 350. It was done for $1. You can do this now for a net credit of 50 cents to the account, which means if you flip the script, you buy and then you sell, you'd be closing it for a debit of 50 cents, and you would have 50% of the premium received when you sold that call option. The market, when we did this, was at 262.10. 267.10, and the market right now is at 264.73. So we're close to where the market was at, but implied volatilities have came off. They're still extremely high, but the implied volatility was right up around 150%, and now it's down to like 123. So it has came off. Even though we went down and came back up, some of the implied vol in this option contract in particular, the March 22nd option contract, has came off a little bit. And that has helped us quite a bit on the profitability of the trade that we did. Now, there's a wide bid-ask spread, no guarantee in Coinbase that you're going to get filled right at the midpoint. There's no doubt about that. You might have to give up a nickel, say 55 cents or so, to get this trade done. But with that mentioned, if you do this trade, um, and you put it in, there is a lot of option contracts and a lot of activity. As a matter of fact, you see this 350 strike, the open interest is 1,099, and this other contract that we did is 246. So you have a lot of open interest, got a lot of activity in the underlying stocks or in the option contracts, the underlying option contracts. So there's a chance. All right, so that is the short spread. Now, if we turn this into a skip strike, I'm actually going to get rid of all of these. And we went 320, 330, 350. Okay. Let's see where this trade is at. 320 buy, 330 sell twice, skip the 340 and buy the 350. Okay. So now that is trading at a net credit of 34 cents. We did it for 42 cents. So not quite as big of a profit, but the trade is still looking good. So we are still positive on the trade. The market ran down, came back up. Ideally, so if we scroll all the way down and we look at, here's where the market is at, right around 265, 264.10. And the one standard deviation move now with the March 22nd expiration, which is 9 days away, is showing right around 305. And that's mainly because vol has came off, right? Implied volatility directly affects where a one standard deviation move is. As a matter of fact, I used to do a seminar called Implied Volatility and Probability, which explains that relationship between these two. So we are now a little bit further out of the money. So the odds of getting to that strike have decreased, if you will. It's still showing the delta at around 17%. So that's actually not too bad. Interesting. No, it's got the IV here at so these option contracts are trading at a higher IV. But it has dropped off quite a bit as far as the at the money IV, which is trading IV. It says 108, and here in this expiration, it's 97. All right, and so we go out, we look at, yep, we're still sitting there. 1, 2, and 3. Okay, so what would we want to happen in the Coinbase trade? If the market stays where it's at or drifts lower, okay, just let everything expire worthless. You have no worries, no concerns. If you really want to try to get to home run, well, with the skip strike, you do not mind, and let's send this to the what if calculator. You do not mind if the market does start coming towards you. All right. So if the market slowly starts drifting towards your 320 strike, we're okay with that. If we are going back to the what if calculator, if we are in the vertical spread, I'm try to bring this down. I know my little head's in the corner. I don't want to bring it down too far. But if we are in the vertical spread, no, we don't want that to happen. We want the market to go this way, and we want to be able to close this thing out for a dime, nickel, or let it expire worthless. But there's no benefit at all to the marketplace going towards our strike. There's no benefit at all. So right now, we've done good on the trade. We've got about 50%. I would still stay in the trade because I'm feeling pretty confident now. Implied volatilities came off a little bit, implying less movement of the stock is more likely going forward. and we're still more than a 1 standard deviation away. So there's no real reason for us to close this trade for a net debit of 50 cents and make only 50 cents on the trade. I would just stay the course. Time decay is going to become big every day that goes by. It's going to get larger and larger, as we have learned in option trading, that as expiration approaches, time decay becomes greater and greater. Okay, so here is the butterfly. Now let me pull this one down. So in the skip strike butterfly, now this is as of today. And right now it's implying that you're doing it for a net debit to the account. That's not necessarily the case, but we'll just ride with it. So right now, this is where the underlying stock is at. If it starts going up, we're all right with this trade. That's 22nd, right? Oops. How did I do that? Yeah, that just happened. Okay, good. All righty. Working with the mouse on my computer is not as easy as a normal mouse. All right, so now I got it accomplished. So now as expiration approaches, let's look at the green line. Let's focus on the green line, right? So we're going to put this on. Our expiration is on the 22nd. Let's go 1 week from today. Now look at how the green line starts morphing into the expiration line. And then let's go a couple more days. Let's go all the way out. Let's go to Thursday. That'll be an interesting day. Now, focus that it is actually at 11:19. So it's using the time and in this profit and loss graph. So Thursday at 11:19 Eastern time on the 21st, this is what the profit and loss graph will look like. And then here's Friday. This would be the day of expiration. So I do emphasize you want it to move slowly, and noon on Friday, if it comes within range, you're getting a huge benefit on the trade, on the fact that you did the skip strike butterfly. But we're not nervous until it starts getting closer to as of today's expiration, right? So we're here right now on the 13th. We're okay all the way up until we're about right here right now before it really starts turning against us. And then every day it gets more and more profitable. So short call spread, I'm looking to close. Skip strike butterfly, I'm okay with. I can stay in this trade longer and kind of hope that I land somewhere within that range, but realize that needs to happen on that expiration Friday. All right. So, do we have any questions? And I would have to actually run out to the TradeHawk software to look at it. So let's just leave it. Let's leave it here. I'm going to come back on Friday. I still will be traveling, but I'll have a little bit better setup on Friday. And we'll look to add another trade. But just stay the course with this skip strike butterfly. As a matter of fact, the fact that we can still get this done for a small net credit, it's looking like 22 cents at this point in time on that midpoint. 32. I like 32 better. We could do it on Monday for 42 cents. I would be okay with putting it on today also. March 29th expiration. This is the skip strike butterfly. Net credit of 40 cents to the account. I'm still okay with doing that trade today if you did not do it on Monday. Now, everything's meant to be a paper trade here on Options Guide TV, but we'll come back on Friday. From Friday to Monday. So from this Friday, March 15th, to the very next Monday, which would be the 18th, it's going to be a lot of time decay. So making it over the weekend is really going to affect this trade. And that's it for this edition of Options Guide TV. Thanks for coming, everyone. We will see you this Friday at 11 a.m. for the next edition of Options Guide TV. And please check out optionsplaybook.com and follow me on Twitter to learn more about all the exciting new things that are happening in optionsplaybook.com land. My handle is at Brian Overby. Thanks for coming, everyone.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.